What should I know about Veritasium?
It was under the blood moon. I felt my heart come. I held you in this strange light, a place where shadows run. And as I kissed your glowing skin.
So basically, I'm looking to tie the entire world through Veritasium. Here we are at Union Square, New York. Late June. One store is open. And that is the amount of customers they have. For those who are not familiar with Union Square, it's Burlington that is open. They're doing a 50% sale, most likely going out of business. Outside of that one store, Forever 21, I think they filed bankruptcy. Whole Foods Market, recently purchased by Amazon. Capital One Bank will have some significant issues due to the significant credit card exposure they have on the consumer side. Citibank, some significant issues. Think CL over VIEs. I'm going to go on that in detail. Variable interest entities, or VIEs, the term refers to a legal business structure where initial investors do not have sufficient resources to support the ongoing needs of the business. Thus, these investors have a controlling interest despite not having a majority of the voting rights. Basically, it's a way of financing a risky endeavor, and the financing of said endeavor takes place off balance sheet. See, the VIE, or variable interest entity, is a type of special purpose vehicle, a company, a trust that is formed either onshore or offshore, but more specifically off the balance sheet of the company, where there is limited visibility to the potential of losses, whether significant or minimal. Now, as you can see from the pictures that were just posted, there are significant losses to be had in the financing of real estate, mortgages, pools of mortgages and home loans, collateralized loan obligations, where significant debt comes and leverage comes into play, combined with material and massive losses. Short block, right, where you have the only businesses that are open. You're talking maybe 1,000 feet, not even 700-800 feet. Chase Bank, Santander Bank, Capital One, Citibank, in this very, very small area. Everything else is closed, boarded up, going out of business, or went out of business. There's no way in the world this will not outdo the Great Depression. Absolutely impossible. And remember, we're not talking Boise, Idaho, right? This is the bastion of capitalism worldwide, New York City. Continuing on, GameStop, gone. T-Mobile, gone. Actually, T-Mobile's, I don't know if any are open physically, but this one is gone. Lush. Now, some of these are not officially out of business. For instance, they say they're temporarily closed. Okay, but they've been temporarily closed for 4 months now. Foot Action, Light Club, Flight Club, which looks like it may be open, and you see they are actually open, but as you can see, there is nobody in there. On the other side, the rents here are outrageous. If you look at the amount of rents that are not getting paid. Planet Fitness, closed indefinitely. So now on the strip that's actual 14th Street, you do see fast food restaurants that are open and empty. Okay? Some clothing shops have opened, and most of them are open to have 30 and 50% off sales. My assumption is they're trying to liquidate to get rid of inventory, which means chances are they're going to close that retail physical location. Another gym, food shop. I'm sorry, this is, I don't know what that is, Nature Republic. City Streets, Amalgamated Bank, of course, more banks with a line. And that bank has no teller presence, only ATMs would appear. That's an assumption on my part though. Supermarket, Chase Bank on the corner. Again, second Chase Bank in a 1 block area. Across from Chase Bank is Republic Bank. And across from Republic Bank, of course, is Amalgamated. So it looks about, I'd say, honestly, about 35%, 40% of the open businesses are banks. Okay? Banks' business model is to borrow money cheap and lend it out for much more money and capture the spread, and or to take that spread or take that money they borrow and gamble with it, with the expectation that they make more money in profits from gambling than the cost of the money and losses that they take. Now, take a look at the business here. These businesses have borrowed monies from banks, okay? And they're all shuttered. Not all, but definitely considerably more than 50% of them are shuttered. Considerably more than 50%. And again, this is Union Square in New York. You go to any center, any area in New York, and it's either this bad or worse. So if the companies that the banks lent money to are out of business, or doing 50% off sales in anticipation of going out of business, what happens to all these banks? 2 and 3 and 4 banks per block. You tell me. Well, anybody who follows me knows I was going to answer my own question. Take a look at this. This is New Point Real Estate Finance. It is a real estate investment vehicle, specializes in aggregating the financing instruments for real estate, mortgages, CLOs, collateralized loan obligations, etc. It is in trouble. It has amassed mass amounts of trash. But you can't tell from the financials because remember, the purpose of variable interest entities, VIEs, these special purpose vehicles, were designed to put the bad stuff, the trash, the non-performing assets off balance sheet so they cannot easily be seen or affect the corporate entity. But of course it will affect the corporate entity because the corporate entity is the economic buyer and holder of these assets. Okay? We're going to go through what the this particular investment company has in store for its investors. First of all, take note that the level 1 assets have decreased, okay? Which meant that the easily observable and easily priced assets have shrank on the balance sheet, but the level 3 assets have increased, which means the stuff that you can't value has moved up in terms of the space it occupies on the balance sheet, while the stuff that is easily valued has moved down. This tells me that the company is shifting things into the level 3 category, which means they cannot sell it, or they cannot get a bid on it, or they can't factor in or factor what the actual market price and value is. One reason why this company may have a problem getting a bid or valuing the assets that it has on its balance sheet is because the assets consist of mostly loans to entities that are not paying their mortgages. Multifamily homes, mortgages not being paid. Commercial properties, as you can see here, not being paid. Leveraged pools of loans on commercial properties and multifamily loans. Again, not being paid to the nth degree. So now you're taking losses and you're leveraging those losses. So Where would they put all these bad loans that are pulled together? Well, remember our tutorial on variable interest entities and off-balance sheet entities? Let's take a look. Contrary to what you may see, hear, or read in the pop media and industry-specific media, real estate is not doing well. You see some activity in residential housing as you see urban flight. That will end forthwith, and then the true fundamentals will come into play. So how do you price the mortgages and the loans given to all these commercial buildings that have tenants who are basically going out of business or skipping town? Well, it's difficult to price it. So if it's difficult to price it, you move it to the level 3 asset category of accounting. Next Point has 50% of its assets as unobservable pricing. That's outrageous. Now, that's not to say that Next Point is not, making any transactions. Actually, there's a significant amount of transactions going on over at Next Point. You see, if you take a look at last quarter compared to the quarter before last, you'll see Next Point is moving quite a bit of its assets into its VIE, into its off-balance sheet vehicle. Okay, we're talking over $100 million over the last quarter, and that was before the COVID lockdown really hit. Next quarter, expect that to explode and expect a lot of losses. A lot. Needless to say, we feel that Next Point is in a bucket load of trouble. Okay? We've created a short list of several dozen banks, real estate financing firms, and financial specialty firms, financing and specialty firms that are in as much or materially worse trouble than Next Point. Next Point is a publicly traded company, by the way, but not a lot of liquidity in the shares. Not a lot of liquidity in the shares. But we do have some medium and large banks that not only have a lot of liquidity, but are still trading much too close to their highs pre-COVID. Absolutely ridiculous, and it's a result of the incessant liquidity that the Fed has pushed in. Basically, they've taken monetary inflation and they've pushed it to the nth level. Okay, we are more than 50% to hyperinflation from a monetary inflation perspective. So all customers and clients of Veritasium, particularly the VE Golds and the VE Assets customers, can contact me and we could discuss this research. Okay, of course, using VE Gold as the currency of choice. I will be releasing additional videos going through not only the multiple banks that are using the off-balance sheet game, the same game that was abused back in the 2008 crisis, by the way, but still prevalent due to lobbying, and also go through our sovereign risk contagion model and the outputs, which I've been promising for a while and is ready. We just have to create the videos or the content to get it out. Click subscribe. Click the share button. Spread the love. And welcome back. We call Bear Stearns, we call Lehman Brothers, General Growth Property, the sovereign debt crisis, the commercial real estate crisis. And I made it very clear we're going into another severe depression. No V-shaped recovery. Straight downward slash. Here we go.